Is Bitcoin the ultimate shield against inflation? In a world where the value of money evidently shrinks over time, many are turning to Bitcoin as a way to protect their wealth. But how exactly does Bitcoin hedge against inflation? First, let's define inflation. Inflation is a gradual loss of purchasing power that is reflected in a broad rise in the prices for goods and services over a given period of time. In simple terms, as inflation rises, the same amount of money buys you less than it did before. This usually happens when governments print more money, which then enters and circulates the economy. To understand why inflation has worsened, we need to look back at history. Decades ago, fiat currency, or money, was backed by gold, meaning that every dollar had real value tied to a fixed amount of gold. However, in 1971, the US government de-linked the dollar from gold, which allowed governments to print money whenever needed. While this helped in emergencies, it also led to long-term inflation. More money in circulation meant each dollar became worth less, and this trend has continued over the years across the global economy. So why is Bitcoin a better store of value compared to fiat currency? Fiat currency, like the US dollar, can be printed in unlimited quantities by governments, which leads to inflation and reduces its value over time. Bitcoin, on the other hand, has a fixed supply due to its software design. There will only ever be 21 million Bitcoins in existence. This scarcity creates value. Bitcoin is also decentralized, meaning it's not controlled by any government or central authority. Its value is primarily driven by market demand, making it resistant to inflation and economic manipulation. Unlike fiat currency, which loses purchasing power over time, Bitcoin's value has historically increased as more people adopt it. It's also easy to store and transfer via digital medium, making it a flexible and efficient asset to hold. Because of its deflationary nature and limited supply, many investors consider Bitcoin the digital gold, offering protection against inflation. So how is Bitcoin a hedge against inflation in practice? Let's say you save money in US dollars. Over time, inflation will erode your purchasing power. A loaf of bread today will likely cost more in the future because the dollar's value decreases over time. But if you hold Bitcoin, which has a fixed supply and increasing demand, the value of your holdings is likely to go up, countering typical inflationary effects. Overall, Bitcoin's capped supply, decentralized nature, and its increasing demand makes it an attractive hedge against inflation and a superior store of value compared to fiat currency. As inflation eats away at the value of traditional money, Bitcoin offers a practical and secure way to store value and preserve wealth. If you found this video helpful, make sure to give this video a thumbs up, share it with others who need to know, and hit that subscribe button for more crypto content.